Hi, I'm Matthew DeYoung, payments consultant with Card Connect. And in this video, I would like to talk to you about credit card processing costs. Credit card processing costs. Specifically, what I'd like to talk to you about today is the components of cost. I'd like to talk to you today about the components of cost. And this will be part one of a three-part video series. And I think any merchant should ask themselves this question: how do I get the best possible rate when it comes to credit card processing? That is a great question. You should definitely ask yourself that as a merchant. And the good news really is that there's lots of opportunities. There's lots of opportunities and room for savings within credit card processing cost. That's what I want you to know. And the way to save money inside credit card processing costs is to optimize the components of cost. That's what you're going to want to do to get the best possible rate. And so option number one to get the best possible rate is to shop for the lowest possible rate. That makes sense, right? If you want to get the best rate, you look for the lowest rate. And that's good in a way, but it's a little bit deceiving. Can I say it that way? It's a little bit deceiving. And here's why. It's deceiving because if you're only looking for the lowest possible flat rate, you're only accessing a small portion of the overall savings available. The overall savings available is much greater than just the lowest possible rate. So we don't want you to just access a small portion of the overall savings available to you. You want to get the whole thing to get the lowest rate. When we talk about shopping for the lowest rate, typically we're going to talk about a flat rate. And if you are playing a flat rate with someone like Shopify or Stripe or PayPal or maybe Braintree, we could talk about Braintree in here as well. That's fine. Maybe you're getting like a 2.9% or a 2.7% flat rate from Shopify, Stripe, PayPal, Braintree, and that's great. There's nothing wrong with that because they add value. But I want to look at this from a different angle. That's option number one, is to shop for the lowest possible rate, and maybe you should pay the lowest possible rate if you're wanting to keep things simple, or if you're getting more premium services with an e-commerce platform or something like that. But option number two is to shop for the lowest markup over base costs. Option number two is to shop for the lowest markup over base cost instead of just the overall lowest flat rate. Are you seeing the difference here? Let me try to demonstrate this by breaking out the components of cost in this video. So the first thing that you have is what they call an interchange rate. First thing you have is an interchange rate. The second component of cost is the assessments. And then the third component of cost is the processing fee. So you have the interchange rate, number one. Number two is the assessment. Number three is processing. So you have the processing cost. And we could call the interchange rate and the assessment the base cost, or another way to say it is the wholesale cost, right? This is just the base cost. And then processing could be the markup costs. I think most merchants understand base cost and markup cost. Okay, so I'm just being very transparent with you right now to say there are three components, but we could lump them into two different buckets. One is the base cost and the second is the markup. And when it comes to the base cost, those costs are fixed. They're not negotiable by your processor or your payment gateway. Those are fixed. They're non-negotiable, and they should amount to about 80% of the costs, and then processing should amount to about 20% of your costs. And those processing fees are in fact negotiable. So you have 80% over here with the interchange rate, and 20% of your cost should be more of a negotiable processing rate. Okay? And one of the questions that you might ask yourself when it comes to all these different costs, these three components of cost, is, well, who is making the money when I use a credit card processing system? Well, the banks are the one making the money from the interchange rate. The assessments go to the card brands, and then your processor or your payment gateway, which are sometimes the same. You want to be aware that there's 3 different components of cost, and just negotiating an overall flat rate is not necessarily allowing you to have the best possible rate, the best effective rate, okay? So believe it or not, your processor does not make money on the interchange rate or the assessments. That is going to the banks and the card brands. And you should also know that when it comes to the markup or the processing fees, it's split between the banks, software, and other players involved. I'll address those things in a different video, but that kind of gives you an idea. So, like I said, the good news is that there's lots of room for savings when it comes to credit card processing. First, you must understand where the money goes in order to access this savings. And so that's what we've talked about today, the components of cost, this part 1 video, which were, number 1, the interchange rates, the interchange fees that the banks charge, the assessments that the credit card brands such as Visa, MasterCard, etc. charge, and then whatever the processor charged, your processing fees. Those are the 3 components: interchange, assessment, and processing. And all of those make up your base cost and your markup costs. If you want more info, download the Credit Card Processing 101 PDF that I've got available for you. You can do that by clicking the button below.